Hey everyone, welcome back to Corporate Decoder, the place where we unravel the mysteries behind company filings. Or should I say, decode the secrets of GameSquare Holdings' latest move, which involves a whole lot of money and a not so small bet on the future of crypto. So GameSquare Holdings, a company operating in the rather exciting world of esports and gaming, has just dropped a report detailing a significant financial event. They're raising a substantial amount of cash through selling a lot of their stock. Let's dive into what this means for them and for anyone keeping an eye on this company. This report is essentially an announcement that GameSquare has entered into a big agreement to sell more of its company stock. Think of it like issuing new shares to raise money. The whole process kicked off around mid-July 2025 when they announced they were planning this stock sale. The company itself is called GameSquare Holdings and they are incorporated in Delaware, which is pretty common for many US-based companies. Their official filing number with the SEC is 001393889. And their IRS identification number, which is like their tax ID for federal purposes, is 9919464435. And yes, they are indeed an emerging growth company, meaning they are still relatively small and benefit from some relaxed regulatory requirements. Now let's talk about the main event, the stock offering itself. This section tells us GameSquare made a deal, a pretty important one, to sell a chunk of its stock. On July 17th, they signed an underwriting agreement with Lucid Capital Markets LLC. This agreement is basically the contract for selling the shares. Through this deal, they plan to sell a massive 46,667 shares of their common stock. That's a lot of shares. The price for each share was set at $1.50. So if you do the math, 46,666 shares at $1.50 per share. That's an initial gross amount of over $70 million before any fees or discounts. On top of that, they also gave the underwriter an option to buy another 7 million shares. This is often done to give the underwriter flexibility and to potentially raise even more money if demand is high. The whole thing closed just a day later on July 18th, and the total money they actually received after paying out the underwriting discount, which is like a fee for selling the shares, was about $61.5 million. So after the fees, they brought in $61.55 million. That's still a very significant amount of capital. As part of the deal, GameSquare also agreed to give the underwriter warrants. These are basically options to buy more stock in the future, usually at a set price. In this case, the warrants are to buy up to 10% of the shares sold at an exercise price of $1.80 per share. Now, what are they going to do with all this cash? The report states they plan to use the money for general corporate purposes, but with a big emphasis on cryptocurrency-related investments. This means they might buy cryptocurrencies like Ethereum, build a strategy around holding crypto as part of their company assets, and invest in anything related to blockchain technology. This is a pretty clear signal about their strategic direction. They're going all in on the digital asset space. They're also keeping the door open for buying other companies or businesses that fit their goals, as well as covering their regular day-to-day expenses. Like most of these agreements, it includes standard promises and guarantees from both sides, conditions that had to be met for the deal to finalize, and assurances that the company will cover any liabilities. This whole offering was done under a registration statement that the SEC approved earlier in June 2025. They also filed various prospectus documents to inform potential investors about the offering. This next part is interesting because it talks about sales of equity that weren't registered with the SEC in the usual way. Right when the main stock sale closed, they issued those warrants I mentioned earlier to the underwriter. These warrants are for buying up to 6,666 shares of common stock. This is equal to 10% of the shares sold in the offering, which is a fairly standard amount for this type of compensation. These warrants are valid for 5 years from the closing date and can be used to buy shares at $1.80 ASIN each. Crucially, these warrants are not registered under the regular securities laws. This is permitted under certain exemptions when they are considered part of the underwriting compensation. Because they aren't registered, the warrants come with registration rights, meaning the holder can request that the company register these shares later. They also have a cashless exercise option, which allows someone to use the value of the warrants to buy the shares without actually paying cash up front. This whole setup is being done under an exemption from registration, specifically Section 4 Cam 2 of the Securities Act, which is for private placements, and Rule 506 of Regulation D. Essentially, they are saying these warrants are being sold privately. This section covers any other significant events that happened. Here they mention they issued press releases. One announced the start of the offering on July 16th, and another confirmed the pricing on July 17th. These are just public announcements to keep investors informed. And here's a key update on that option I mentioned. On July 18th, the underwriter did indeed exercise part of its option, buying an additional 3.5 million shares at $1.50 each. This added another $4.8 million to their coffers after the underwriting discount. So the total cash raised from the stock sale and the exercise of the option comes out to roughly $61.5 million plus $4.8 million plus $4.8 million plus $4.8 million plus $4.8 million proceeds. This is where they list all the supporting documents, the exhibits that come with this report. Exhibit 1.1 is the actual underwriting agreement. Exhibit 4.1 is the template for the warrants they issued to the underwriter. Exhibit 5.1 is a legal opinion from their lawyers, Baker and Hostler LLT, essentially confirming that the shares are properly issued. And Exhibit 23.1 is their lawyers' consent to be filed with the report. Exhibits 99.1 and 99.2 are the press releases I mentioned earlier, detailing the launch and pricing of the offering. And Exhibit 104 is a data file, which is how all this information is technically filed with the SEC for computer analysis. This report is signed by Justin Kenner, who is the Chief Executive Officer and a director of GameSquare Holdings. It's his official sign-off on behalf of the company. So let's put this all together. GameSquare Holdings has successfully raised over $66 million in cash by selling a significant amount of its stock. This is a huge influx of capital, and it clearly signals their strategic intent to heavily invest in the cryptocurrency and digital asset space. This makes a lot of sense given the current trends where many companies are exploring or adopting crypto strategies. On the positive side, securing this much funding is a strong indicator of investor confidence and provides GameSquare with the resources to execute its ambitions. Their clear focus on crypto and blockchain suggests they are positioning themselves for growth in what they likely see as the future. However, there are always risks. Investing heavily in cryptocurrencies is inherently volatile. The value of digital assets can swing dramatically, which means the company's financial performance could be heavily influenced by market movements in this sector. Also, the warrants issued to the underwriter could dilute the ownership of existing shareholders if they are exercised, meaning each share would represent a smaller piece of the company. The company's strategy is bold, and it could pay off handsomely if the crypto market continues its upward trajectory and if GameSquare makes smart investments. But it also carries significant risk as the crypto market is still quite uncertain. Overall, GameSquare Holdings is making a decisive move into a high-growth, high-risk sector. Whether this gamble will pay off remains to be seen, but they now have the financial firepower to try. What's your take on GameSquare's crypto bet? Do you think this is a smart move or a risky gamble for their future? Let me know your thoughts in the comments below. If you found this breakdown helpful, please hit that like button and subscribe to Corporate Decoder for more insights into the financial world. And don't forget to join our Discord community linked in the description, where we discuss all these exciting company updates. Thanks for watching, and I'll see you in the next one.